Good afternoon, everyone. This is Trader Tim, eMiniMind.com. Today's Monday, February 15th, 2016, President's Day. The markets are closed, but I thought I would do a video anyways and talk about kind of the week ahead and what I'll be looking at for trade setups here on the ES. Before I do that, just want to mention that I will be speaking at the online Traders Expo. That's kind of in conjunction with the New York Traders Expo happening at the end of the month. And I believe that's February 25th is when I'll be speaking at 2:50 Eastern Time. So you can find the link to that in the member dashboard area. And tune in. I'll be talking about creating a winning trader's mindset. So looking at the economic calendar this week, let me pull up what we have. Quite a bit of stuff on the economic front. Let me bring this over here. So a big week this week, a lot of red stars as you can see. So we've got FOMC minutes on Wednesday. That'll be a big one. That means that leading up to the minutes, or really all day Wednesday, be trading very cautiously. We don't want to be taking any trades right around the FOMC meeting announcement because things can be super volatile and can really spike in one way and then another. And with the volatility that we've seen, don't want to be getting whipsawed in and out of trades. Jobless claims on Thursday, CPI on Friday, lots of other good stuff here. Housing starts in the morning on Wednesday, so a lot of good catalysts that could move the markets this week, and I think we're going to see some good moves in the markets this week. You'll notice I have that 50% long, the 1840 level, drawn up here on the ES, and I also pulled from the most recent high to low that gave us a 1940. So we've got this 100-point range on the ES, and I'm not going to be drawing 50% in the middle of this range because we tend to just blow right through them. And so what I'd be looking for is getting long at the 1840 level or down near this level, or getting short at the 1940 level. Now, getting short at this level, you want to be very careful. You want to wait for that trend break. Wait for a lower low to be put in. You don't want to just necessarily be shorting into a very strong rally. So if we're moving higher in 15-minute retracements and all of a sudden we go into extensions and we're really moving fast, let a setup or two break before getting in. Or if you're going to put a order out here, let's say kind of near highs or get in on the 512 tick chart, make sure to keep your stop small because you don't want to be getting into a position with a wide stop on a day where we're really bullish just because we're coming up to a short. I think at this point the long does have more strength down here at 1840. The FOMC meeting on Wednesday will really be, or the FOMC minutes rather, will be more of a catalyst with some of the other announcements that we have on Wednesday. So that can really push the market. So not really taking much stock into today's price action just because the broader market was closed, and not going to be, like I said, drawing any retracements in the middle of the range, just looking to take bigger longs. If we're below 1900, be looking for longs up into 1940, and if we're above 1900, we'll say, be watching for a reversal or some sort of selling, and if we do get selling, then look for us to move right back down to 1840. Potential inverted head and shoulders here. We've got the left shoulder, the head, and then if we come up to 1940 and then put in another right shoulder and then make a swoop back up, that's some potential. If we just start ripping, I'd be looking for us to break this 1970 level and then expecting that to kind of be some resistance at the 2000 level. So trading within 250% retracements is always a area to be cautious in the daily time frames. Which is why, again, I like to stick with that small 512 tick chart when the dailies are kind of messy and real choppy. So that's kind of what I'm looking at for the week ahead. Longs down here at 1840, potential shorts at 1940. But if we break highs and we're really strong intraday, I don't want to be shorting into a really strong rally. So being cautiously bearish up here at 1940. So like I said, a couple webinars coming up, the Traders Expo on February 25th, and then another live trading session again in March. So stay tuned for more information on that. And with that, I hope you have a great week, and we'll talk to you soon.